everyone, and welcome back to Boni's Life, your essential guide to navigating the crypto universe. I'm Boni, and this week we're diving headfirst into a market that's crackling with energy. We've got a major political shift in the United States, a cascade of crucial economic data, and a crypto calendar so packed with high-impact events it could make even the most seasoned traders' head spin. Is the market coiling for a massive breakout to $100,000? Or is this the quiet before a storm of volatility? We'll dissect the technicals, unpack the fundamental catalysts, and hear from the titans of finance to give you the clearest possible picture. And of course, I'll be sharing my personal playbook for how to trade the exciting week ahead. So grab your coffee, settle in, and let's get to it. All right, let's start by looking at the charts. The past week has been a fascinating study in consolidation. After a powerful rally, Bitcoin has been trading in a tight range, hovering around the crucial $95,000 mark. According to the latest data from CoinGecko, Bitcoin is currently priced at $95,023, showing a respectable 4.9% gain over the last 7 days. What's particularly interesting is that while the price has held steady, the 24-hour trading volume has dropped significantly, down nearly 50% to around $18.7 billion. In technical terms, this is a classic sign of a market taking a breath, gathering energy before its next major move. It's like a sprinter settling into the blocks, muscles tensed, waiting for the starting gun. When we look at the indicators, we see a mixed but cautiously optimistic picture. The Daily Relative Strength Index, or RSI, is sitting comfortably at 50.9, which is neutral territory. This tells us the market isn't overbought or oversold. It's in a state of equilibrium. However, the M.A.C.D indicator is slightly negative, suggesting some short-term bearish momentum, which could mean a bit more of this sideways price action. But the big picture remains bullish. The price is trading well above its 200-day moving average, a key indicator of a long-term uptrend. The overall technical summary from multiple sources is a strong buy, which tells us the underlying strength is still very much present. The key pattern I'm seeing on the Bitcoin chart is an ascending triangle. We're seeing higher lows since the beginning of January, with the price compressing against a horizontal resistance level at around $96,500. This is a bullish continuation pattern. A decisive breakout above this level could be the catalyst that ignites the next leg up, with the first major target being the psychological barrier of $100,000. On the flip side, if we fail to hold support at $93,000, we could see a retest of the $91,000 zone. For now, the market structure is healthy and the consolidation is constructive. Now, let's turn our attention to the fundamental drivers for the week ahead. And what a week it is! We have a confluence of crypto-native events and major macroeconomic data that will undoubtedly inject volatility into the market. Let's break down the calendar. First up, the crypto-specific events. We have several massive token unlocks on the horizon. On January 18th, Ondo is set to unlock a staggering 1.94 billion tokens, which represents over 57% of its release supply. This is a huge event that could lead to significant selling pressure. On January 20th, Layer 0 will unlock over 25 million tokens. While not as massive as the Ondo unlock, it's still a significant event to watch. These unlocks increase the circulating supply of a token and often lead to a short-term price drop as early investors and team members take profits. But it's not all about selling pressure. We also have some very bullish events on the calendar. On January 19th, the vote for PancakeSwap's proposal to reduce its max supply ends. If passed, this would be a deflationary catalyst for the Cake token. On the same day, Teller Tributes has a mainnet upgrade, and Mantra is holding a community connect to announce what they're calling a new era. Then, on January 20th, Avalanche is teasing a major announcement. These are the kinds of events that can generate significant positive momentum for a project. Now, let's zoom out to the macro landscape. The political climate continues to be a significant factor for all markets, including crypto. While there are no major political events scheduled for this week, the market will be closely watching for any new regulatory signals or policy shifts that could impact the digital asset space. A more favorable regulatory environment is a key catalyst the market is hoping for in 2026. On the economic front, we have a slew of important data releases. We'll be watching the Purchasing Managers Index, PMI, for a read on the health of the manufacturing and services sectors. We'll also get the latest jobless claims data, which gives us insight into the labor market. And the big one, GDP and inflation data. These numbers will be closely watched by the Federal Reserve and will heavily influence their decisions on interest rates. Any surprises here could send shockwaves through all financial markets, including crypto. So, what are the big brains in finance saying about all this? The sentiment is surprisingly bullish, albeit with a healthy dose of caution. Carol Alexander, a finance professor at the University of Sussex with a solid track record of predictions, sees Bitcoin trading in a volatile range between $75,000 and $150,000 this year, with a center of gravity around $110,000. She attributes this to the market transitioning from being retail-driven to institutionally driven. This theme of institutional adoption is a recurring one. A report from Bitwise predicts that Bitcoin will not only set new all-time highs in 2026, but will also become less volatile than a major tech stock like Nvidia. That's a bold statement that speaks to the maturation of this asset class. We're already seeing this play out in the Bitcoin ETF flows. Last week alone, spot Bitcoin ETFs saw a net inflow of $1.81 billion. This is serious institutional money pouring into the space, creating a strong floor for the price. Even the big banks are turning bullish. One major banking giant recently put out a report suggesting Ethereum could surge to $7,500, driven by fee growth and institutional adoption. They point to the approval of Ethereum ETFs as a major signal of growing institutional acceptance. This is a significant shift from the skepticism we saw from traditional finance just a few years ago. The outlook for the Federal Reserve is another key piece of the puzzle. While the Fed is expected to keep interest rates on hold for now, analysts are projecting rate cuts later this year, possibly in June and September. Lower interest rates are generally bullish for risk assets like crypto, as they make it cheaper to borrow money and invest. Some traders are even betting on a surprise game changer from the Fed this year, a strategy they're calling run it hot. So, how do we trade this complex and exciting market? Here's my playbook for the week ahead. Given the strong underlying technicals and the bullish institutional sentiment, my bias is to the upside. I'm looking for opportunities to buy on dips rather than shorting this market. The key level I'm watching for Bitcoin is the $96,500 resistance. A clean break and hold above this level on high volume would be my trigger to enter a long position, with an initial target of $100,000. I would place a stop loss just below the breakout level at around $95,800 to manage my risk. If we see a pullback, I'm looking for support at the $93,000 level. A bounce off this level would be another buying opportunity. However, a break below $93,000 would signal a deeper correction, and I would wait for the price to stabilize before re-entering. For Ethereum, I'm watching the $3,400 resistance level. A breakout above this level could see a quick move to $3,500 and beyond. I'm also keeping a close eye on the altcoin market. With Bitcoin's dominance slightly decreasing, we could see some explosive moves in altcoins this week. I'm particularly interested in projects with major announcements or upgrades on the calendar like Avalanche and Mantra. But remember, risk management is paramount. The market is likely to be volatile this week, especially around the major economic data releases. Don't over-leverage your positions and always use a stop loss. It's also a good idea to take profits along the way. Don't get greedy. A profitable trade is a good trade, no matter how small. And that's a wrap for this week's crypto market analysis. We have a fascinating week ahead of us with the potential for some major price action. Remember to do your own research and never invest more than you're willing to lose. What are your thoughts on the market? Are you bullish or bearish? Let me know in the comments below. And if you found this video helpful, don't forget to hit that like button, subscribe to Boni's Life, and ring that notification bell so you never miss an update. Look out for the short episode this evening entitled The Collapse of the Clarity Act. inside crypto's biggest legislative setback. Until next time, trade smart and stay informed.